Joining us now to look at expectations of the budget is Dave Mohr, who is Chief Investment Strategist at Old Mutual Wealth. Good morning to you, Dave. I want to put to you the question that we've been tossing around in the studio in the earlier parts of this week. Given the tone of the State of the Nation address, a hint perhaps of we need more signals of redistribution, perhaps a more left-leaning budget, maybe a symbolic statement, but a statement nonetheless. The wealthy, the high net worth individuals, higher taxes perhaps, levies on big property transfers, things like that. Do you expect anything like that in the budget?
David, I think it's unlikely. If we look at the budgets over the last few years, I mean, we've seen the increase in the dividend tax, which could be regarded as a wealth tax. We've seen the same time the increase in the capital gains tax. So I think we've seen certain movements on that score as well. So from that point of view, I would be very surprised if there would be any levy imposed on wealth or assets or something like that before the Davis Committee comes to any hard and fast conclusions maybe on this issue. But in an election year, one must always be careful not to be too dogmatic about these things. Because if you look at it, it's an election year. There's very little that government can do for the ordinary person, I think, in this budget, because they're being constrained by two factors. The one factor is the fact the economy is only growing at 2%, as it was confirmed yesterday again, and therefore tax revenues aren't growing at the usual double-digit levels, but very sort of mediocre 8-9% growth in taxes would be a fair assumption to make for next year. So there's very little to give away in terms of the budget. So against that background, maybe there could be a surprise, but it's not widely expected.
Yeah, this government, of course, and previous ANC governments reduced the corporate tax rate quite substantially over the past decade or two. No possibility of a corporate tax increase. I suppose the need for economic growth is so great that you don't want to play with that.
I think if we look at it overall, if you look at the big three taxes, and you've just mentioned corporate tax, the other one being the VAT and personal income taxes, these are the main drivers of revenue. And in a year where the economy is under pressure and is likely to remain under pressure for this coming year, I doubted whether the minister would budget for much more than 2.5% real growth in this coming fiscal year. I think it would be very dangerous for government to start tampering with the tax system in terms of tax increases. Because on the back of a weak economy like this, if you increase taxes, you run the risk of not getting the increase in revenue that you're expecting. And if it has a negative impact on the economy, you might be surprised in the fact that revenue won't grow at all. I think we've seen a very good example of that if we look at the fuel levy that increased last year, and it was expected that there would be a 12.5% increase in government's take of the fuel levy. The latest numbers suggest that it's only running at 7.5%. So a very much smaller increase, although the actual levy has increased. So from that point of view, against the background of a weak economy, government would have to be very careful not to tamper with these big tax rates.
We do have what we call the mini budgets. There's a 3-year rolling budget, so there are fewer surprises than there used to be in the budget. What will you be looking for today? If you were going through that text or listening to it as it happens, what are you on the alert for?
Well, I think probably the most sensitive point is spending. As I said, we're not going to close this budget deficit by increasing taxes at this stage. There's a definite need to get smaller budget deficits in South Africa. Few people realize that where we stand today, South Africa's budget deficit as a percentage of its economy, of GDP, is actually bigger than that of the US at the moment. In the US, the budget deficit has closed significantly. We're in a situation where investors are unsettled about emerging markets that run big deficits, and this is one of the twin deficits that it's one of the bogeymen of the rand that has resulted in big capital outflows. So I think it's important that the deficit is closed, and that they show some restraint in terms of spending. So one of the first numbers I would look at is some indication of what is expected in terms of the government's wage bill and that increase. Because unless that is brought under control, it is going to be very difficult for government to close this deficit in a slow-growing economy.
Yep. Well, the finance minister has tried that before, and they didn't always listen to him, so that's one issue. Just a final point there, Dave. There are whispers that it might be Pravin Gordhan's last budget. It's the end of the first Zuma administration, likely to be a second. Have you heard anything along those lines?
Yes, I mean, we all pick up these rumors as we go along. I think, it would be a pity in the sense that Minister Gordhan came in at the time of the recession, and he's really been fighting with his back up against the wall over the last couple of years. And, one would have thought it would have been nicer for him to retire as Minister of Finance, perhaps, on a high note, and not against the background of a slow-growing economy, and increasing disciplines on emerging markets in terms of budget deficits. But I said one doesn't know, but the rumors are strong.
Yep.